I think after 20 years of going through the ups and downs of memory industry, driven by consumer adoption of memory chips, consumer application like iPhone, we are finally beginning to see a super cycle for memory is driven by changing technology. As I said earlier, it is actually the memory that helps Jensen and NVIDIA's AI platform to have more throughput. In a way, it is memory guys that should be able to capture 75% gross margin, because that incremental increase in the throughput is what enabling the Blackwell Ultra, and eventually Rubin to be able to provide or to generate more token for the same square inch of silicon. So in that context, I do believe truly that we are, for the first time, in a cycle where the memory industry is going to be rational and also be able to preserve and expand gross margin. And this is something that investors are going to have to feel confident. If you look at the memory names like SK Hynix, Micron, the valuation multiples have actually been depressing as the EPS forecast increase. Multiples are coming down, and I think as we gain more confidence that the Micron, SK Hynix, or even Samsung are able to preserve and expand gross margin, you're also going to see some form of a re-rating and expansion of multiple, and I think that has yet to come. But I do truly believe that memory is actually one of the key enabling of a next generation of AI platforms that generates more token per square inch of silicon.
All right. Mehdi, good to see you again. It's been a while. Listen, you probably didn't notice it, but as we've been talking, we've been scrolling through Susquehanna's positive ratings, and it's a pretty long list, but probably pretty similar to everybody else's list. One name I want to focus on, of course, is TSMC, Taiwan Semiconductor Manufacturing. But before we do that, though, look at TSMC specifically. Let's talk about Taiwan, if we could. You're one of these guys who doesn't think that Taiwan uncertainty is much of a risk at all to the global chip industry. I want to ask you why not, or rather whether you've changed your mind over or because of what's happened just over the last weekend. The U.S. taking Venezuela, or rather toppling Maduro, capturing him. Because, for a lot of folks, they're thinking, look, this could only mean basically this is almost permission for China to do the same with Taiwan, don't you think?
Well, I'm not an expert in geopolitics, but what I know of semiconductor industry, and I used to work as a chip designer in the 90s and have been an analyst since late 90s. Taiwan has become the cornerstone of innovation and enabling next generation of chips. We have been dealing with the China issue since 2015. And for the past 10, 11 years, we have been dealing with the geopolitics of China versus Taiwan. I do believe that TSMC is going to be very critical to the global economy, especially a global economy that is driven more and more by AI, not really consumer electronics. It is going to be the only contract manufacturers that could enable Elon Musk at Tesla or AWS, Amazon, Microsoft, all of these big conglomerates that are expanding their AI infrastructure. They do need TSM. In that context, I'm more concerned about natural disaster, like an earthquake, than geopolitics. I think in that context, TSMC is going to preserve their how they're situated at the top of the supply chain, and they're going to be the one that make all of these different diversified AI chips.
Yeah, geological or tectonic risk, understood. 1705 last time on TSMC, 2330, up about 2% in yesterday's trade. But, when you take a look at TSMC right now, which is on your preferred list, I know, and compared to, let's say, NVIDIA, which is the 800-pound gorilla in the chip world right now, when you think about it, if TSMC didn't exist, I mean, these are the only guys who can make the stuff that NVIDIA is designing. So I guess what I'm trying to ask you is, do you believe at these levels, 1705, TSMC is actually undervalued?
Well, I think TSMC to some extent has been re-rated over the past 10 years. I remember when we talked about geopolitics 10 years ago, with the first Trump administration, there were a lot of concern as to what happens to this decoupling of China from the rest of the semiconductor supply chain, including Taiwan and TSMC. And back then, not only we had the geopolitics, we also had Intel as an up-and-coming competitor, and back then Samsung Foundry was a lot stronger. So collectively, the risk has been minimized. TSMC has been re-rated. I think the continued re-rating hinges on what happens to the gross margin. TSMC's gross margin versus NVIDIA. Who's actually creating value? Who's got the most capital-intensive business model? And that's TSMC. I do argue that as you think about the three-quarter of a semiconductor industry as it relates to AI, you got the fabless companies like AMD, NVIDIA, Broadcom that are generating a lot of attractive gross margin. Then you have the memory guys that are actually enabling the higher throughput AI, much higher token per square inch. And then you have the TSMC that actually makes everything and then integrates. Jensen was talking about Rubin last night. Keep in mind that Rubin requires a lot more integration at TSMC. So I do think that eventually you're going to have more margins going towards TSM and Micron or memory in general. And in that context, TSMC's re-rating should continue. As I highlighted, memory names haven't even begun with re-rating, and that's going to be ongoing throughout 26. But definitely, I do believe that the TSMC re-rating is ongoing. We have minimized the downside risk from geopolitics. Now is a fight between who's going to capture more gross margin.
Okay, Mehdi, so far we've been talking downstream, the end result, and products, chips of whatever sort. I want to move upstream and get you to talk about another one of your preferred names, which is ASML, the Dutch giant chip making gear, lithography machines, etc.
Yes.
We had news a couple of weeks ago that China has managed to beta and prototype its own, partly using ASML alumni, ex-employees, partly using ASML parts sourced on the secondary market, and that's probably no surprise, right? How much risk does this put on a stock like ASML, considering that, China revenue accounts for, I don't know what, 40, 50% of the money that ASML makes, but now China looks like they're going to be able to do it themselves soon.
Sure. I'm not sure if I agree with that statement. There are a couple of things going on here. We talked about the AI. We talked about gigawatts of AI infrastructure constructed in 26 and 27. Effectively, I argue that semiconductor industry is going to reach and exceed $1 trillion in 26. And if you just take 15, 16% of that, which is a low end of the capital intensity, there is plenty of a spending that is going to go towards the equipment companies. And if you look into the 27, the spending is actually going to increase at a faster rate. So effectively, we're going from 100 billion wafer fab equipment industry towards a 140 or 150 by end of 27. ASML is going to capture a big part of it. Look, companies like TSMC, even Chinese manufacturers like YMTC, CXMT, or SMIC, they need a reliable partner. They're not going to put some R&D project into this very expensive fab. At the same time, the AI guys, AI supply chain, want more chips. In that context, ASML, along with Lam Research, are going to capture a big part of this increase in the spending. The alternative to how ASML makes their tool, look, we went through this 15 years ago. There were a number of competitors in Japan. Now the competition has shifted to China. There could be some limited application that these vendors could sell a tool for. But when you're talking about $1 trillion of a semiconductor industry, half of it going to go towards AI. You need a reliable partner, and that's ASML.
And does the same logic apply to some of the memory angle in terms of the Chinese competition to Samsung and SK Hynix's?
Very good point. In the past, China would commoditize everything. Samsung would intensify that commoditization. Well, because of this technology, because of this inflection point in technology like HBM, Samsung is focusing on innovating, not commoditizing. At the same time, the memory made in China by Chinese vendors are going to be used in China. When you look at the gigawatt of AI infrastructure deployed, is mostly outside of China. And this is where memory manufacturers outside of China would benefit. So yes, YMTC and CXMT, they have a very ambitious plan. They're going to go IPO and they're going to spend a lot. But that memory made in China is going to be used in China. At the same time, the growth rate of AI is all outside of China. And this is where Micron, SK Hynix, and to some extent Samsung should benefit.